Hello, everybody. Welcome to Day Trader Next Door question and answer time. Get right to it. Cretu Alexandru asks, great content. Thank you. Do you use leverage? Yes. You use leverage all the time in futures, just kind of the way it works. You don't want to use too much leverage, but that's just kind of the way futures work. To take a trade on one contract, I have to put up $500 of a good faith deposit to take one contract in the S&P that has a notional value of 200 and some $1,000. So that's a fair bit of leverage, but you're not going to trade that if you only have $500. You should ideally have, 5 to 10,000 to trade one contract of the ES. So even at that, that's a lot of leverage, but you got to keep in mind you're using this for a calculated trade. So if you were to trade futures with zero leverage, you wouldn't get anywhere really. But again, they're made to trade with leverage because you don't outright own the asset. It's just a contract for the future price, right? So I hope that makes some sense. How many months were you at break even month on month before turning profitable? I'm at break even for a month now and wanted a yardstick to measure my progress. So that's a good question, Runa. Thank you for that. My first year was very tumultuous. I wound up technically profitable at the end of my first year, but only just ever so slightly. I essentially lost a whole lot right out of the gate and spent the rest of the year zigzagging up and down and wound up the end of the year ever so slightly positive. My second year trading was better. My net result at the end of the year was much better, but consistency month to month, I had some losing months for sure. I had some big winner months and I had some losing months. But as far as consistency month to month of really not having losing months very often or at all, that was probably halfway through year 3, somewhere in there. A few years really until you get to that super consistent stage. And some people never get to that, but I certainly think that it's very possible if you go about things the right way and you're diligent with your risk management and you're trading a good strategy and just generally treating it like a business. I think that's definitely possible. I wouldn't expect to get there anywhere short of probably 2 years. If you get there in a year, that's excellent, but most likely not going to happen. If you're break even for a month, well, that's great because getting to break even is, I always say, and it's true, but it's about 80% of the way to actually getting consistently profitable. If you can be break even after a whole year, then you pretty much have it made. There's not a whole lot left after that to get to being profitable. So I would say, you're doing well. Stick with it. Be super disciplined. Make sure you don't make any mistakes. Don't let yourself ever have any blowout days that'll mess up your whole month. And just keep on chugging at it, and you're on the right path. Steve has a computer-related question. I don't know if I totally understand it, Steve, but it sounds like the colors are messed right up on your trading view. And the best thing, I know, apparently they've told you to try the web version. I would try that and see. I mean, obviously the desktop version should work. There's got to be something wrong there. I downloaded the desktop version, but I don't use it because it's much easier to use Chrome tabs just for the way that I have it, and I have it all over the screen in different windows and stuff. So I prefer to use the Chrome tabs for sure. But I will take a look at mine and see how it looks, see if there's anything different. Try it in your Chrome browser and see if that works. You may well find that's the way you want to use it, because the limited amount of time I did play with the desktop version, it was nowhere near as nice to use as just having it in browser windows. Maxwell McLeod, this is great. Why does it look so simple and easy when I do it, essentially? And then it seems so excruciatingly difficult when you're doing it yourself. What can I say? It's just the way it is. It's very difficult. It may look easy on a replay, but it's not even easy when I'm sitting there doing it. It's because any one little decision could totally change the outcome of that trade. And then, I really like to get one and done. Most of the time I can get that. But if I don't, then I got to start another one and then I'm in the hole, and it just changes your whole psychology. So, I certainly know, I realize how difficult it is. The main difference really is like a dozen years in the seat of doing it regularly, and with anything. Experience will make you better at it. And this is the kind of thing where you're not going to learn it and wind up consistently profitable in 6 months or even a year, most likely. It's a long game. If you like it enough and you're dedicated and disciplined enough, it is a long game worth playing because what it can do for you is really quite dramatic. It can also do awful things to you, and when you're getting started with it, you'll get to know if it's something that you can hack, if it's something that matches with your personality and just what you like to do. And you'll also learn if you're disciplined enough to do it, because you have to be beyond disciplined to do this, to actually get anywhere with it and make a living out of it. But if you're new at it, just keep learning and keep practicing, and do it with play money. Do it in demo until you're consistently profitable, at least for a few months. And then it's not going to cost you very much. You're not going to blow up your savings or something crazy like that. But really just practice, 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 time in the seat and time in front of the screen. That's what'll get you there. How do you manage risk in case of a connection outage? Do you have a second broker? Is it something you're not really worried about? I've always been told backup, 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 but it's a lot of fees. Yes, in fact, in one of my videos, I say that backup, backup, backup. As far as a different broker goes, that's not necessary. I do still have an account with a previous broker that I used to use. I haven't taken a trade in it for a very long time. There's $1,000 sitting in it just to keep it technically active in case I were to need it for something. But it's really just dormant. It's the same brokerage where I have my long-term investments. So it doesn't cost me anything other than just keeping a few bucks in it to do that. I don't think you need to have a second broker, really, as long as you work with a decent broker. But as far as the backup goes, to me, the backup is having the app on your phone. I have the CQG app on my phone. First of all, any trade I have is going to have a server-side stop loss and a server-side take profit. So if my power goes off, I do have a battery backup too, but I mean, I've never actually had to use it, quite honestly. If my power were to go off, the worst thing that could happen is the trade hit my stop loss. Best case scenario, if we still have cellular internet, I just pick up my phone, I open up the CQG app, and if I were to do that, I'd want to just close the trade right there. I wouldn't want to try and manage it on this. That's not feasible to me. So really the biggest thing is just to have some sort of a backup. Calling the trade desk is another option. I've never actually done that. I wouldn't want to have to do that either. You want to have it on something digital that you can just click it and shut it off. There goes another WhatsApp comment. I think you all know this, but if there's ever anybody writes back and says, WhatsApp me and it looks like me, it's not me. I don't even have WhatsApp. I don't have WhatsApp or Telegram or any of that stuff. I'll never give out my cell phone number, reply to a comment asking you to text me. No. I think most of you guys probably know that, but I see it all over YouTube. Even huge channels, little channels, everything is just rampant. So please disregard those. I try and delete them as soon as I see them, but I can't catch them all. Mike D, is there a reason you're not trading daily or multiple times a day? I've got this question before. It's a good one, actually. One thing I'm confused about is your win percentage rate is great, so why not do that daily and several times a day? Well, in an ideal world, Mike, I would trade almost daily. In an ideal world, I would trade Monday to Thursday, take Friday off. That was kind of my sweet spot when I was really digging into this and trying to accumulate a lot. Just the way my life is, it doesn't really line up that way. I've got a lot of family responsibilities, a lot of doctor's appointments for the family, and various other things. A lot on my plate. And one of the big reasons that I sold my company to do this full-time was, first of all, I was already kind of doing it full-time anyway and hiring somebody else to run it, which I didn't like doing it that way, but also so I could be home to do these things for my family. It's a sacrifice that I make, and ideally I'd like to trade at least a few days a week. Hopefully I should be able to do that this fall now that my mother's settled in her new house and kids are back in school and everything. I should be able to do this a few days a week. And without too much getting in the way, and that would make me happy. So that's my goal anyway. But why don't I trade all day? First of all, a big part of why my win percentage is so good is because I don't do that. Like in my previous experience, if I continue to trade all day, I will make more money, yes, but my win percentage will definitely go down. I'll take a lot more losers. I'll still wind up most likely more positive than if I quit after one winner or after the first winner type of thing, but my win percentage would go dramatically down and I'd have to sit and trade all day, which I don't want to do. Don't get me wrong, I like trading very much, but I like being out of the market even more with the winner in the bank. So, and that's one of the things, as you go through this, you will see and probably learn that that's nicer for you too. Once you get to the point where you have an account that you can trade enough size to make a good day on one trade, there's really not a whole lot of reason to do more than that or risk giving any of that back if you don't need to. I'm at the point where I don't have to do that. I went through years of really pushing, and then after my divorce, pushing again for a while, and I've kind of done that. And now I'm sort of in maintenance mode, and I try and free up more time for my family and for other projects that I have. So that's kind of my outlook on that. Now, you can go through a phase like I did of really pushing it, but honestly, in hindsight, if I had a nice long runway in front of me and no rush to try and make a whole lot of money, in looking back, I would trade the way I do now. Always. Maybe do it 4 or 5 days a week, but just quit after one and done, or quit after a decent winter. It's so much easier on your psychology and your stress level, and the overall results are not as good as pushing all day through. But pushing all day through is not enough better to be worth all those extra hours and all that extra stress. So that's my take on that. Board, that's why you might want to adjust your mic proximity. There's a lot of bass. This is a Justin, love the content. That's a very astute comment, Board, that's why. I do realize I am getting proximity effect with that microphone. First of all, I'm not really old, but I'm old enough where that radio sound sounds good to me. That compressed, bassy sound. So like nowadays, the sound everybody wants is this real sterile, digital kind of YouTube shotgun mic up here type of sound. That's what's in style now. That's not what I grew up with. So that's part of it. The other part of it is in the summertime, I have an air conditioner running like right here, and it's loud. So I try and get that close to my mouth so it doesn't pick up too much of that. Like I have all kinds of microphones. I have 2 microphones. I've got, this is an AKG C535 vocal microphone, which would be used on some stage shows, but is also more common for recording vocals and recording instruments, guitar. It's a really nice guitar mic. It's a nice double bass mic on the bridge type of thing. So it's what I have. So that's what I'm using. But that's a very good observation. Another question from the same person. Board, that's why. Explain what time frame the trade window is in. The window where my orders are placed is a 4,000 tick chart. That's why it looks like a 2-minute chart. Depending upon the time of the day, it can look like a 15-minute chart, a 30-minute chart, or a 1-minute chart, or a 30-second chart. Every 4,000 transactions, not contracts, 4,000 transactions back and forth between 2 parties, every 4,000 of those, it prints a new candle. The thing I like about the tick charts, in the overnight, where there's not much activity, it condenses that to very few candles. And whenever it's really busy, you have a lot more candles. And you also get a sense of the volume without having to look at a volume bar. Because the more candles it's printing, you can see them print much quicker. And you can tell then that there's been 4,000 transactions go through. Now, it's not exactly volume because the transaction can be 1 contract or 1,000 contracts, but most of them are 1 or 2 contracts. You get an idea approximately of how many you're getting through there. So that's why that looks like a 2-minute. But if you were to look at it, say in the London session, you'd say, well, that looks like a half-hour chart. Richard Lee's the boat. There goes all your extra money. Oh, I know. I now have 2 boats. To be fair, I did get my other boat. And I really like it. The family loves it. Really excited. I've got a little bit of polishing to do on it and a few little things like that. It's not extravagant, though. It's the biggest. We don't have big water here. It's the biggest cabin cruiser that we can fit in any marinas around here, which is still only 25 feet long. So it's nothing super extravagant, and it certainly wasn't expensive, but it's in pretty good shape and it'll do us. So, but I do know even with my other little boat, the breakout another 1,000 thing is totally accurate. I can only imagine what it would be like with a really big boat. Maybe someday I'll punish myself with that, but as for now, us driving 3 hours to get to big water is just not feasible. So I want something we can have close by. So anyway, I think it'll feed that urge for me, and the family will really enjoy it. It'll be a lot of fun and not too expensive either. Digital SETI. How do you set up the P&L report in Sierra Chart? Now, Push, I believe, already answered this for you. He's exactly right. I'm going to read his answer. It's under the trade menu, trade activity log, and then you choose the statistics tab. And that's where that is. So thanks for answering that ahead of time, Push. Appreciate that. John Doe, I often see if price holds at the 80 or whatever level, I'll go along. How do you see that the price holds at a level? Looking at the price action, how do you know when it stopped falling and will reverse up? What point do you enter? You probably saw a pretty good example of that and explanation of that in the last couple of videos, because I've really tried to talk through everything, and as price comes to a level, what I'm watching for. In a nutshell, though, I don't know, first of all. So it's always an educated guess. But if price is coming down to a level, for instance, how do I know that, at least for now, it's holding there? Well, to me, it will, and I do this with pretty much any 10. Not to say that any particular 10 level is more significant, but just I look at it in those quadrants of 2.5 points at a time. So if something falls down to a 10 level, like say an 80, okay, the price is coming down towards the 80. And when it approaches 80, it pokes down to maybe 79.50 and pulls back to 80. And then maybe pulls down to like 79 even and pulls back to like 82.50 or 83. And then pulls back to 80 and seems to stop and just hold there. To me, that's showing that it broke 80 a little bit, but it was weak, and then starting to push back in the other direction further than it penetrated the 80 to begin with. So something like that would make me think that there's a good chance it's going to hold. Now, if I want something that's going to show me, more likely, then I'd like to see the level come down, stop right at the 80, and then push back up to at least 85, and then pull back to around, say, 82.50, and not be able to get further down there, sit there. To me, then that's showing it was it didn't even break the 80, but it was a weak touch of it. Is if there's a fair bit of nuance to that, and really the only way you get that is by, say, taking some advice like that and then applying it by watching the market for hours and hours every time it does come down to a level like that and see what happens. But that's probably the most simple way I can explain that quickly like this. But keep watching the videos, because I'll try and talk more about that. And like I say, the last couple of ones, certainly the last video, I think I went over that. But they would have been in my commentary anyway of what I was looking for and as price was coming. So hope that helps. John Smith, do you use volume profile analysis or supply and demand zones? Seen them used for stock trading. They're intriguing. Yes, market profile, volume profile is quite intriguing. I don't use it though. It's quite intriguing, but I don't really bother with it. Not to say it's bad. I just haven't found it something that does me a whole lot of good, or that I find that I want to look at too much. Now, I do occasionally look at volume profile chart. They have them on TradingView. But are they part of my daily planning? No, they're not. What's more part of my daily planning is actual levels on the chart, and previous days highs, previous days lows, previous day close especially. Things like that are what are more on my radar. Whenever they align with previous support and resistance, those are kind of the places I'm looking at for targets and entries, and just plain where the market's going to go. So support and resistance zones for sure, but not determined by a market profile. Bilal Khan asking, hope I said that right, Bilal, about time and sales. What's your tendency of time and sales during possible breakouts? What I notice, he says, is it speeds up when we get close to a breakout. Most breakouts are fake outs. Yes, you figured that out. That's good. Most breakouts are fake outs. I don't know how to take those trades. So time and sales is not really a pillar for me. It is something I like to look at, mainly to see if the market is functioning properly or if there's something that's gone funny. And also occasionally I will use it to catch a small trade if I see a real wallop of orders in one direction, to kind of either jump on that bandwagon for a few points, or more likely than that, fade it back to where price was if it makes a spike. And like I say, just to see that the market's, to get a sense of how the market is operating. If price is going up and volume is really low, for instance, whereas if price is going up sharply and you've got a big spike in large orders in that direction, then it makes sense. If price starts going up sharply and it doesn't have the order flow behind it, there's something up, and maybe you don't give that the same weight as if it was supported by the volume and the fury of orders type of thing. As far as trying to trade breakouts, I don't too often trade them unless there is a kind of magnetic target that's really close to it, that it only maybe has to get 5 or 10 points to that target. Then I will occasionally take a breakout, but for the most part, I tend to fade those, or try and wait for a trend and get in on one more leg of that little intraday trend. Bats, what software are you using for the tick chart? Is it also TradingView? No. Good question, but no. TradingView, for some reason, it must have to do with their back end. They do not have tick charts. I don't know why. I wish they did. I've emailed and asked for it numerous times. It's not happening anytime soon. Same with time and sales. It's just not happening. The tick chart is in Sierra Chart. That's the program I use to actually execute my trades. I like it because it's a little bit maybe difficult to use compared to TradingView for sure, but it's super reliable. It has literally never crashed. I keep saying this, but I'm going to jinx myself, but it has never crashed on me in the many years I've been using it, not even once. It's very low on computer resources, and it's a physical program on your computer rather than a web page for placing trades. So I just like all those things about it. And it also gives me tick charts and time and sales, and lets me create a nice little quote board where I can just see all the prices of all the various markets in one little box, which I quite like too. TradingView, though, is absolutely beautiful for time-based charts and pretty much any kind of study like that. Mr. Three Putts, why such really tiny bars? I'm assuming you mean the little, the line, the bar charts type of thing on my time charts, the ones where I have eight in a window. I don't know. I instead of using candles on those because they're small, I find using the bar chart is just easier because it lets you see more in a smaller area. And then when you spread it out, it looks a little bit funny. You can always just click the button to turn into candles, but I'm not so concerned about what type of candle it is. You can see that information in the line chart. I'm really just looking at price, activity, and range and where it's gone type of thing. I'm not looking at it on the candlestick level type of thing there. So that's why I use the bar charts. Muggy's channel, it's not really a question, but he makes a good point of something that I'm sure a lot of you guys go through and that a lot of you guys mention. Said he was constantly struggling giving back gains and over trading for the past 2 months. And he's talking about watching how I trade, being fairly relaxed, walking away with some money, even if it's not a lot relatively, being content with that, taking positive days, banking positive days, playing defense and not being worried about leaving some money on the table. He's finding that those things are starting to come to him, and he doesn't feel bad for how much he left on the table after that trade and that sort of thing. And that's good. I mean, I leave money on the table all the time. Not to say that that's a good thing, but I'm totally okay with it. And as long as I get enough of it, I'm fine. And I'm quite happy to leave it because I don't know where the market's going to go. I'm just fortunate that I got a profitable trade. You're never going to catch all of it. And if you start beating yourself up for what you left on the table, it kind of takes the fun out of it. Now, when you're getting started and you're starting to build confidence and say you're trading with like a 3 or 4 point stop loss or 5 point stop loss, and your target is 15 points or something like that, or 20 points or 10 points, whatever it might be, and you find yourself walking away with 3 points all the time or 5 points all the time, and it still goes to 10 or 12 or 15 points most of the time, you will see that, and that will gradually give you the courage to stay on longer. That's an evolutionary process. It just happens. You need the confidence in order to hang on. But that confidence has to be real and from experience, because you don't want to mistake that for arrogance. You don't want arrogance in your trade where I'm going to wait until it hits my target because it's going there. No, it's going to your stop. If you do that, you're going to give up your 5 points that you just had in your hand, almost in your hand, and then you're just going to let that go and feel like an idiot. So it's a balance, but don't feel bad for leaving money on the table. If you know that you're leaving too much on the table through much experience, and you see that you are leaving too much on the table and you should be hanging in a little bit longer, take that into account and try and do that a bit at a time, bit by bit. And before you know it, you'll be able to hang in for 10 points or 12 points or whatever. Or you'll also learn to recognize when the market is turning, and you'll get out with the 5 points whenever you should, and you'll stay in for the 10 whenever you should. I'm not that great at staying in for, there's lots of trades I take that go 20 more in my favor, and I only take 10 or 8 or 12 or whatever out of them. But I don't beat myself up about it because I still got a nice winning trade, and that's all I need, and then I'm out of the market for the day, and I can't lose it. I don't think I can pronounce this. I don't know if it's an acronym or what. Swyveu. SWYVEVEU. Anyway, thanks for your question. In Sierra Chart, why don't you move your stop loss to the other side of your entry? Like a manual trailing stop, at least you can move it to your break even, then you've eliminated all risk in case it shoots up. Well, I do like to move to break even, yes, but I generally only move to break even whenever I'm into my trade as much as I've risked on it, and or whenever I think that I might be wrong, or I'm just sick of it and not willing to give the trade any more time. But as far as a trailing stop, I don't do trailing stops. I used to, years past when I did swing trading, I did trailing stops. I don't like them because with the type of trading I do, the trades are too small. Like the profile of the trade's too small. In the time that I did try it, limited time I did try it, I found I just got stopped out for 3 points where I could have made 10 more often than where it got me the 3 points instead of the break even. It just wasn't worth it. So if you're doing a larger trade profile, swing trades and stuff, it does make more sense. But to me, for the type of trading I do, it's not really worth it. Peter Turs, what are those pink bars? What indicator are you using? Now, the colored bars is what's called on TradingView LBR paint bars. That's Linda Ratke is a reference for that. She's the one that came up with that style. And she's also the one that came up with using the Keltner channels like that. So my chart is very similar to the chart that she uses. I just use it a little bit differently. It's coded where the bars also turn red and green at different times. And to be honest with you, I don't really even know what exactly that means or why they do that. What I do know is that the purple or pink ones come on bars with a close above the channel. I leave that on because I like to see that. You can see at a glance bars that close above the channel. As far as the other ones go, I don't use the different color coding. Again, for those charts, I'm not looking at those charts for day trades. I'm looking at those for overall market direction, where it's been. I'm looking at it to find levels. I'm not looking at it to execute a trade on. So it doesn't so much matter. Glitch Android. Got a question. What's the name of the market news website you use for home sales, CPI, etc.? Financialjuice.com. I used to use the Forex Factory site, which was great, like their news page. Financial Juice is, to me, miles above. It's way, way better. It's a nice layout. They do have, it's a slightly delayed news feed, the same as any of the other free sites are. They do also offer a paid news feed, which I get, but I'm actually going to do a video in the future looking at the real-time live news and see what kind of advantage that does actually give you, and if it is something that you can trade. But so that's just more of a curiosity. But financialjuice.com, excellent layout. You can customize the news feed to the instruments you trade. It's just miles above Forex Factory, in my opinion. I would check that out. Another question, do you still use Tick Strike? Yes, I got Tick Strike. I still use it. It hasn't quite made its way into like my core trading yet, but it's there, and it's up most of the time when I'm trading. So I do use it. I do like it. I like how it works, and I like just how it gives me a little bit different aggregate of data at a glance. I really do like it. I'll try and do some more content on how I use that too going forward. But I know a lot of people aren't going to have that, and it's not too bad if you buy it outright, but if you're renting it monthly type of thing, it is kind of expensive. Not so much for somebody like me, maybe that's doing this full time, but for me, buying it outright was way better deal than paying for it monthly. But for somebody who is learning or demo trading or trading with $1,000 account or $5,000 account, paying for it on a monthly basis is kind of a lot. So, but I will bring that more into my videos and kind of show how I use it. It really is an interesting tool, and I quite like it. Now, Tick Strike's actually run by the same people who do the Financial Juice site, and in my experience with them so far, they've been very professional and just really put out a top shelf quality product compared to what's been out there before. So I'm really impressed with them. But the news site is completely free, and I would highly recommend that over the other ones that I used to use. Talmadge Moorhead. Surprised to see you leave a trade 1 ES contract on the burner and drive off to run errands. Yeah, this was on one of the small account videos, I think. Yeah. I will. I'm pretty sure I've left 5 contract trades on while I go up to check the mail. I don't think I'd go uptown or anything like that. But one contract, yeah. It's, for me, one contract is definitely a small trade, right? So it might be like leaving a micro lot and Forex on for somebody who's just getting started, right? But you're right in your rationale here. Leaving a day trade on without touching it till it either hits the target or hits the stop, in my experience, does not work. Certainly not for my type of trading, nearly as well anyway as discretionary trading does, and sitting in front of it and locking in break even and punching out whenever price starts to stall, that sort of thing. Yeah, I could never be a set it and forget it trader as a rule. But now and then I will do it if I think the trade's decent, or if I just kind of feel like giving it a shot. Leave it on with a small stop, or lock it in at break even, leave it on and pull my target in a little bit so that if it gets close to it, it'll tick me out. But yeah, nothing wrong with that on a small position when you're really comfortable with it. But as a rule, I much prefer to babysit the trade. DJK, excellent question here. When I try to trade the S&P 500, I go into debt 8 pips when I start the trade, plus the spread. So I can't scalp like you do, meaning me, type of thing. How come it's like that? How do I set up an account that's essentially it's not like that? That's because you're trading a CFD on the S&P 500 cash. It could be on the cash, it could be on the futures. It's a CFD, that's the problem. It's a Forex instrument as opposed to a futures instrument. I keep saying I'm going to do a video on Forex versus futures, and I'm going to do it. Those just take a bit more planning in these spontaneous type of videos, but there is no comparison whatsoever between the two. And one of the things is the spread. When you trade an ES futures contract, there essentially is no spread. The only spread there is one tick between the bid and the ask. Occasionally, wild market conditions, there will be a little bit larger spread, but that's extremely rare. It's not going to happen every morning or something. You might get slipped a tick now and then, but that's pretty much it. And be slipped, I mean like you might wind up paying a 2-tick spread instead of a 1-tick spread. But as a rule, it doesn't happen very often. With Forex, you're paying the spread to the broker, right? The broker is setting the price also. So they're dictating the price, they're setting the price, and they're charging you a wider spread on that price. It's very much stacked against you. Now, I did trade the YM, or not the YM, but the Forex equivalent, like the US 30, before I got into actually trading the futures. That's what got me into it, actually. I chose that at the time because the spread on it was better percentage-wise than the spread was on the ES. At the time, it was a 4-pip spread, which at the time was not bad. The index was much lower priced then, but it was doable, right? But trying to trade the S&P 500 with an 8-pip spread, I don't know if the pip is 50 cents or $1 or 10 cents. Either way, it's too much. Whenever you trade the futures contract, it's a 1-tick spread, which is a 25-cent cash spread. So the spread between the bid and the ask is 4,000 and 4,025 cents. That's it. So it's really because it's a different instrument. The spread is not set by the broker, it's set by the market. The broker doesn't set the price, the market sets the price. When you sell a contract or buy a contract, it's actually routed through to another person, not to the broker. They don't take the other side of your trade. It's just infinite number of advantages to futures compared to Forex. At the time when I was getting started, futures wasn't nearly as accessible as it is now. They didn't have the micro contracts for, $1.25 a tick like they do now. You only had the minis at $12.50 a tick. That's a big difference, right? It's a factor of 10. And it just meant that somebody like me, a dozen plus years ago, figuring he wants to throw $500 into a trading account, couldn't do that in futures. You literally could not do that. The margins were way higher. You couldn't have taken a single trade with that at the time, but I could throw it into a Forex account and trade a micro lot for 10 cents a pip, right? So back when I started, trading futures was like trading a full lot in Forex. Whereas now, it's not like trading a micro, but it's like trading a mini. And some of them are even less than that. So it's accessible now for somebody to start trading in futures. And that is the way to go. Don't bother with Forex. Some people do make a living at Forex even still, but don't bother with it. If you have the choice and you're starting out, go with futures. They're made for this. It's traded through a centralized exchange. Trades are all guaranteed to clear by the exchange. It's heavily, heavily regulated. A whole different ball game than Forex. A few good comments from Talmadge here. One thing he mentions, though, self-control to stop trading after 3 losses or break-evens is enormous. You make it look easy. Well, now, it isn't easy, that's true. However, if you've traded for any amount of time, you've probably had one of those blowout days where you could be doing great that week and you let one day ruin your entire week or month or your entire account. That's happened to me. I've, blown up a profitable month in one day. I've blown up a profitable week in one day. I lost 10 grand in one trade because I was stubborn and didn't have a stop loss. All those things that happened years past, I remember them. And when it finally got to the point where I remembered those enough, and I just plain didn't want to ever have a catastrophic loss day again. I started doing that and actually following my rule. And I followed it to the T now for probably 7 or 8 years, period. No exceptions, because it still sucks, but it's so much better than what happens to you whenever you keep going, because at that point you're not in a good place mentally, and you're just going to try and revenge trade and get it back, and you're going to blow up your day or your account or your week, your month. It's a given. It's almost guaranteed. If you do happen to come back from it, you'll do it once, and the next 10 times you try, you'll have a catastrophic loss day. So really, it comes with experience. It gets easier to do the more times you have really bad days. But if you can start doing it right away, and take my word for it, and avoid those days, it'll save you a lot of money and frustration. It might be the difference between actually making it in this business and being one of the many the majority that don't. Alexander has a question here. He is now scalping in Forex. He's at break even, scalping a 1-minute chart in Forex. Wow. Well, if you're getting break even at that, you're doing pretty well, actually, Alexander, because that must be difficult with the spread, trying to scalp a 1-minute chart. Break even if you exclude the fees, yes. Okay. If you move to futures with $10,000, scalp the 1 minute with a single contract, hoping to make $500 to $1,000 a week, how should I schedule a scalping plan for this? I don't know exactly what you mean by how should I schedule a scalping plan for this. If you want to make $500 to $1,000 a week on one contract, that's doable. 500 for sure is quite doable. You only need to get 10 points there to do that. And $10,000 to trade that one contract is fairly safe. Now, it sounds like you're used to doing a lot of trading, a lot of trades per day type of thing. And if that works, that's fine. Go ahead and do that. It's not the way I would do it. I would really try and do the minimal amount of trading per day like I do. But as far as getting 10 points in 1 week, that's all you need to make $500, or 20 points to make $1,000. Sounds a lot easier than it is, but it's definitely doable. There, I'll just turn those screens off there. As far as setting a plan, my plan would be, limit your trades per day for sure, unless you're really good at and consistent at going throughout the day, pushing through the day over and over and over again, grabbing a point at a time. If you can do that, scalping, 10 times in 1 week, there's your 10 points, there's $500. If you can get 2 points at a time, 10 times a week, that's 20 points. There's your $1,000. It's definitely doable. It's definitely harder than it sounds, but it is doable. Best thing I would say is demo trade first for a month at least, and see if you can replicate what you're doing in Forex. You probably will be able to, because your spread's going to be a lot thinner. Getting in and out of one contract at a time, even if you're scalping, is easy. No problem with liquidity there. Best I would say is if you're already, I don't know if you're trying to scalp currencies on a 1 minute chart, that would be next to impossible, but it sounds like you're probably on the index CFDs. Try it in a demo account and see if you can replicate it, and go from there. But like I say, if you're scalping successfully, you're probably pretty good at catching a good entry. If you can stretch that entry out a little bit into a longer trade with a little bit longer stop if need be, and still keep it well positive, that's going to make for a lot lower stress trading for you going forward. Bra mode, does this work in the US? I don't know if he's talking about, it's on my cheat sheet video. The cheat sheet works anywhere, yes. As far as day trading and futures trading, yes. In fact, most of it's done in the US. Most of my audience is in the US. There's not that many of us up here in Canada, I don't think, that trade futures or day trade period compared to the States. But yes, it certainly works in the US. Paul Hansen, what do you trade and look at for your cheat sheet? Well, if you watch the cheat sheet video, Paul, it does go through all of that. I primarily chart and trade the ES. I use it for whatever instrument I'm trading. Now it's the ES. I've been trading the ES. It's been my bread and butter for a long time, but I have at times traded more instruments and traded, more in the oil and gold and stuff like that. And I would make one up for each instrument that I might be trading that day. Now I'm pretty well down to just the ES, so I just make up the one. Another computer question. Chuck Brown. Would I be able to connect two TVs directly to my MacBook Pro for now? They have USB-C connections. I don't know, Chuck. I can't answer that because I don't know. I have an iPhone, but I don't have Mac computers. I don't have a MacBook or anything. Some sort of a dock connector to go to HDMI. It might work. I mean, if a computer monitor will work, it will probably work, but I don't know. I'd look into that and see what the maximum display specs are for your model, and if you can run two 4K screens through HDMI or DisplayPort through the USB-C out, I would think it should work, but I wouldn't guarantee it. It's just not something I have experience with the Macs. J Nebs or Neves. Trying to trade crypto after work for some weeks now. Oh boy. For very small accounts, it's cheaper since you can have a very small position without leverage, and that's good for practicing it. The issue are the wicks. When I see you trade the ES market respects, the range is almost to the tick, but in crypto, you often have wicks of 1% or more. Yeah, I wouldn't try and day trade crypto. Even I've been day trading for a long time, successfully for a long time. I wouldn't touch it with a 10-foot pole because it's just not a good instrument, in my opinion, to day trade. It doesn't make any sense to day trade it, in my opinion. You would be better demo trading futures or demo trading / trading one micro of the CFD for on a Forex account. If you only want to throw $100 at it or something and you have a Forex account, anything but crypto. It just doesn't behave the same as the more established financial instruments do. And the volatility is crazy. If you catch it at the right spot, then yes, you have more potential, of course, but it just doesn't behave very well. And to me, what's most important is something that behaves in a predictable, repeatable manner. And the main stock indexes, energies, metals a little bit less so, and the commodities in general a bit less so, but certainly the stock indexes, the financials, the bonds and stuff, they behave very well. They've been around for a long time. They have behaved, in much the same way for a very long time. They do repeat things. Their action is, to a certain degree, enough of a degree, predictable and repeatable. So if it were me, leave the crypto completely on the sidelines, unless you want to buy some for, long term or for fun or whatever. That's up to you, but it's not an instrument for trading. Futures are the number one instrument for day trading. They're just made for it. You can go long or short with equal ease. It takes less money to do it. It's just as easy as Forex without the spread and with an awful lot more accountability and security. Another question I get from a number of people: what subscription do I have in TradingView? I should have mentioned this earlier because probably half of you, 3/4 of you have fallen asleep or got bored by now. But I've noticed this. I get 8 charts in a window in TradingView. I always have. I had the Pro Plus when I signed up for it initially, which is several years ago now. I notice now that you need to get the premium in order to get 8 charts. I guess I'm grandfathered, because one thing with them is once you get on with them, they don't really raise your price. I didn't ask for a deal. I don't get a deal. I pay what I pay, the same as anybody else. But because I've been with them for so long, they keep my price quite low. So if I was starting now, the premium subscription is more than twice as much. I don't remember what it is exactly, but it's a lot. I wouldn't bother. I would go for the whatever one gives you the 4 layouts per screen. That's enough. I mean, you can have multiple of those, so you can even split them in half in a monitor if you want. So that's what I would go for, which I think is still the Pro Plus, but something that you can get 4 screens in a layout and a really good number of, like a lot of layouts, so you can make as many as you want. Like I have dozens of layouts. I don't have them all on my screen at the same time, but everything I have for the ES, I have duplicated for gold, oil, for the bonds, for instance, and also for the YM. So I can just quickly pull those up anytime I want, rather than changing the instrument on each individual chart. So 4 charts is plenty. I'd go with that one. I think it's around $25 a month. I believe it's Pro Plus. Another computer question: what operating system is my machine? Windows 10. I have Windows 11 on my laptop. I like it just fine. I haven't changed it to this yet, mainly because I'm concerned about the UltraView desktop software, if it's going to work on Windows 11 yet. I don't know if it does. I don't really want to find out that it doesn't. So I'll eventually upgrade when they make you, but for now I have Windows 10 on this. Had a few questions about the 2.5 levels and why I find importance with them. I like to break things into chunks, otherwise it's just it's a whole lot of randomness on the screen. So in my analysis, whenever I'm following a trade, is going in my favor, especially, I look at everything in 2.5 point increments. And that's kind of how I look at it. So in order for price in my head to be at, say, 05 and price is on the way up, it's got to come up through '05 and at least touch 750 before I consider the price to be at '05. Before that, it's at 2.5. It's just a way of thinking to sort of simplify where price is without looking at essentially at one tick at a time. I kind of think of it as like a bar moving from here. Okay, now it's up here. Okay, now it's up here. And also I have kind of specific rules, techniques for what happens if it comes back, if I'm going to stay in the trade or punch out, for instance. So like if it comes back through two of those, I'm most likely going to punch out. But if it can hold at least at the previous one from where it is now, then I'll want to stay in. So it's just a way of splitting it up into more manageable chunks. And you'll find oftentimes that when a price comes down to say a 10 level, it will go down and tag that 750 below it, or it'll come up and tag the 250 above it. And if it can break through that and go up to the '05 and then come back and hold at the 10 or at the 250 above it, it shows that price is starting to, in its ebb and flow, it's starting to push more up, say, rather than going down. So just a way that I look at it. I find it simplifies things a lot and works for me. Anyway, guys, the camera's been running for over an hour now. I literally can't see it. My vision's starting to get blurry. So I think this is long enough for today. Most of you are probably asleep on the couch with your AirPods stuck in your ear like me. But thank you so much for watching this anyway. Keep your questions and comments coming. My cheat sheet newsletter, daytradernextdoor.com. Again, thanks a lot for being here, guys. I hope you found this helpful. Have a fantastic weekend, and I'll see you again soon.